with important data points coming in from Beijing, where the trade data for December has come in well above expectations. Looks like exporters in the country have front-loaded shipments as worries over Trump's tariffs mount. Now, exports in the month of December have risen 10.7% in dollar terms versus expectations of 7%. Meanwhile, data also showed that imports rose 1% last month from a year earlier, reversing from the contraction in the preceding 2 months as well. Now, you do have the analyst community that has continued to be rather bearish on the outlook, saying forward-looking estimates on exports look less optimistic as potential tariffs could also dampen momentum.
Okay, meanwhile, in the United States, the government has further tightened AI as well as tech exports, maintaining the market's might in computing tech and executing more ways to block China. Now, the new controls on AI chips go beyond China. This set the export quotas for about 120 countries. Export to 18 allies, including Japan, Britain, Netherlands, exempt from these new rules. While, of course, the newfound rules have come in from the last leg of the Biden administration to help uphold US position in the market. What's left to see is how President-elect Donald Trump's incoming administration enforces the new rules, as both administrations share similar views on competitive threat from China.
Alright, then moving on and shifting focus to the key takeaways then coming in from the New York Federal Reserve survey. Consumers expect inflation to be stickier over the next few years. Now, according to the survey findings, you do have expected inflation 3 years ahead that rose to 3% in December from 2.6% the month before. When you take a look at expected inflation over the next year, that was unchanged at 3% as well, and expected inflation 5 years ahead declined to 2.7% from 2.9% as well. Now, important to note here that investors have scaled back those bets on Fed rate cuts in the recent weeks, while the Treasury yields have been on an upward spree. That is a trend that we've been observing, and we'll keep tracking the macro cues from the US, both those CPI and PPI prints due this Wednesday that we've been talking about for a while, Priyanka.
Absolutely. So this will be on tap. They're the key economic indicators. But let's talk about some stock-specific action also. Let's put the spotlight on some specific news in the sense of global pharma giant Moderna, which has gone ahead and lowered its 2025 guidance by nearly $1 billion. And this is on account of potential headwinds later this year, which the company sees. Now, Street has in fact already priced in company's cost-cutting as well as expansion efforts of late. The company now expects a revenue print to be between $1.5 to $2.5 billion, most of which they expect will come in the second half of the year. The stock tanked a whopping 17% in trade.
Alright, then moving on, global sales of fully electric vehicles and plug-in hybrids rose 25.6% on a year-on-year basis to 1.9 million in December, albeit slowing for a second consecutive month. Sales in China as well jumped 36.5% to 1.3 million vehicles in December as well, totaled 11 million for the whole of 2024. When you take a look at the United States and Canada as well, sales rose 8.8% to 0.19 million in December as well. But when you take a look at Europe as well, you're looking at reported sales of, sales of 0.31 million, uptick of 0.7% coming in there from the same month of 2023. So that's the roundup as well as EV sales are concerned in terms of Europe as well.